Very good morning, everyone. This is George Bayruthi from FS Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And today I'm going to continue with my series on CFD trading. This is part 4. If you missed the first 3 parts, all you have to do is call us and we'll actually send them to you. But anyway, today I'm going to cover some of the material we covered you in the first 3 parts. First of all, why we trade CFDs. CFDs stand for contract for difference. Very quickly and briefly, I'm going to say that it's a leveraged trade. You need only a small outlay of money. There is a possibility of high return, but you must understand the risk versus reward. I opened the account for just $500. This is of course a very small amount of money. It's actually an example to show that, with a very small amount of dollars, provided you know the risk that you might lose the whole lot. However, we're not into the trade to lose money, we are into the trade to make money. It's very important to say at the beginning that if I was to lose the $500, which I don't want to, I'm not going to lose sleep over it. And of course, the account for contract for difference can be anything between $500 as a starting point and can be up to $50,000, depends on the size of your risk appetite and how big you are as a trader. So, to start with, we opened the account on the 25th of June. We put $500, and within 3 weeks, the account, as you can see here, the account value in the top here, you can see that the account became $760. That is $260 profit, or 50% in just 3 weeks. What we did, we traded a company called Appen, and we entered the trade at a particular price of $29.16, as you can see here, and we closed it sometime later on, and we entered and we made some money. So I mean we can actually show you how every single trade was actually executed, but anyway, you can see the entry was $500, and within 3 weeks it ended up to be $760. And that is the trade here for you. We entered the trade, we bought the trade on the 26th, that's 1 day after we opened the account. We entered at 27.09. We closed it at 29.16, and that's how we made the 50% profit. Of course, if you were to buy the shares, you would end up paying a lot of money, like $2,709, and you would have made $200 profit, as you can see here. However, that's actually about 10-15% profit if you were to buy the shares. But because the leverage product in CFDs, like options, like any leverage product, 10% increase in the share price ended up with 50% profit in the CFDs. We also, after that, on the 10th of July, we entered the trade Perseus Mining. We entered the trade at 61.5 cents, and we closed it some time later on, I think about 3 or 4 days later, and we increased our profit. As you can see here now, the 50% profit became 74% profit. The $500 entry on the 25th of June, as you can see here, actually sorry, it's the 26th of June, and a few weeks later, 4 weeks later, it ended up to be $869. That is 74% profit in 4 weeks. Now that shows the Perseus trading. We entered the trade at 61.5 and we closed the trade at 71 cents, and that's how we made the extra $200 profit. And finally, we entered some trades in the ASX 200. You can see here we entered in and out several times, and now look at our value of our trade. $500 is now this morning $1,519. Let's call it at 1,520. That is actually 300% profit in 6 weeks. Can you please tell me how you can make 300% profit in 6 weeks elsewhere? Anyway, of course you need to understand the risk. Contract for difference is a leveraged product. there is high risk and high return. But if you are informed and you know what you're doing, you can actually limit your losses if you're going to lose some money and maximize your profit if you're going to make some money. Anyway, we teach people how to trade CFDs, and if you want to learn more about CFDs, all you have to do is call us. But just a brief, why we trade CFDs? Okay, there is no expiry date if you trade options. There is a time decay. You lose money as the option goes into its time decay. There is no time decay in CFDs. They are traded exactly like shares, except there are only a small amount of capital that you need to enter. Finally, our disclaimer: we don't know your financial circumstances, so everything I said here is only of general advice only. And before you take any action, please consult with us or with your professional advisor. Okay, finally, if you have any questions, all you have to do is call us. These are our details. You can write to me directly, george@fssecurities.com.au. You can call me on my mobile. If you're ringing from overseas, 61 for the country code. Don't need the 0. 61 411 25 9526. And as you know, my name is George. So happy trading, and I hope you are successful in everything you do in trading.